Let's get it.
Yeah, we're not going to post this, but if you guys miss it, for anyone who misses it, we'll just send you a link. I mean, obviously, you guys are here if you guys want to go over it, but we're not going to be posting this or anything. Just because this is a bit unstructured, we're going to go over your guys' questions. This is meant to be interactive, so feel free to type in the chat, ask questions, stop me at any moment. If there's anything you see you don't understand, even if it's not related directly to the topic, just let us know and we'll get right to it. Right? You guys paid for this, so we want you guys to get the value out of the server and out of these classes, right? So with that, let's get started. So yeah, first of all, what indicators do you guys use? What do you guys want to know more about? Just type it in the chat. I'll start to explain it.
You go over MACD, please.
MACD, yeah, we'll do that. What else, guys? MACD. We're gonna go over Ttm Squeeze. We're gonna go over RSI. VWAP. Yeah, we'll do VWAP definitely. Yeah, VWAP and MACD are actually used together all the time. What else you guys say? That's it. VWAP, MACD, Ttm. All right. We can briefly go over stochastic, money flow index, all that crap. You guys have probably never heard of, but all right, let's do it. What do you want to start with, VWAP or MACD or stochastic? VWAP, all right. VWAP, volume weighted average price. It's basically a 2-for-1 indicator. So what it does, it calculates the average volume of the price action depending on what time frame you're looking at, and it can basically chart out levels of support and resistance. I like VWAP because I find it to be a lot more not accurate, but it's a lot more up to date than moving averages are. Moving averages are used with like specific mathematical formulas that take into account all the candles for a set number of days. So for example, if you have daily candles and you have a 200-day moving average, it's going to use the last 200 candles to calculate moving average. And exponential moving averages just use put more weight on the more recent price action, right? What VWAP does is it takes volume into account, right? So that's, if you guys look at every day, you're going to see how VWAP kind of just hold on, let me draw on the screen. You guys kind of see how VWAP just like shifts randomly like that when there isn't much volume in the market, or whenever you have like a new day starting. That's because VWAP takes into account the number of shares that are actually being traded at once per candle, right? Why this is important is because it actually gives you a much clearer picture of what the price is doing, right? So price action, all price action tends to find support and resistance on some line, whether that be an actual level that it tests multiple times, or it can be VWAP like you guys see here, or a moving average. If you guys see a price just bounce off a certain line, it's probably relevant in some way. If you see any aggressive bounces like this, this is probably an exponential moving average or a past level that it tested way back in the past. But the reason we like VWAP is because we actually tend to get more volume whenever price is at a critical level, right? So that's why you might see price, just bouncing around VWAP so much. As traders, we always say that prices that are above VWAP are generally in an uptrend, and prices below VWAP are generally in a downtrend, right? So if you guys are going long on a position, more often than not, you want to be trading whenever you are above VWAP, right? Price loves to bounce off VWAP. It's always going to struggle around VWAP usually, because again, it takes volume into account, and when there's more volume, you have more trading going on, which is where you're going to see more price action, right? There always tends to be more volume during a breakout or whenever you're going to cross a critical level, right? So if you guys look here, for example, on SPY, you guys see how we touch VWAP multiple times, right? So if you're going long on SPY for that day, you could have gone long in the morning, and you could have used VWAP as your stop loss, right? And then right over here, we would call this reclaiming VWAP, and at which point you could just stay in this trade and you would have made a shit ton of money had you stayed right there, right? So obviously it's not as simple as just trading things above VWAP. but it can give you a very, very clear picture of when, when price is really in a steady uptrend or a downtrend, right? The further you shy away from VWAP is usually the more aggressive you're going to fall into or out of a trend. So for example, here, once we broke down this level past VWAP, we kind of just free fell all the way down to here. Another example is on this chart is right over here. If you're looking over here, guys, this is our the lowest point of the day at the time. And then, the second we went below VWAP, that's kind of our first signal that things might be going south. We consolidated there. And then once we broke this, that low of the day, it was all downhill from there, right? Just a free fall. So VWAP is very important. It is important to notice that VWAP doesn't really change on different time frames intraday, right? So if you have 1 minute candles, 5 minute candles, whatever, this line is going to stay more or less the same. If you guys pull up VWAP in your Thinkorswim or other brokers like E-Trade or Schwab, you might actually have 3 lines, but we just want to keep the middle line on, right? I think Bollinger Bands are a lot more accurate and a lot more conceptual than the upper and lower bands for VWAP is. So if you guys don't know how to turn those off, I guess you can just look right now. I don't use Thinkorswim, but
yeah. So to turn those off,
yeah.
You add the indicator and then you double click on it and then you go to lower band, upper band, turn off the show plot. That's pretty much it. And you can just keep the VWAP regular one.
All right, you guys good so far? Any questions?
All good.
All good. Yeah, I think it's pretty simple. Yeah, I'm trying to think of what I use VWAP for. I mean, it's not very I wait for price to trade around VWAP. I like to see it above VWAP usually if I'm going long on any position. A great way to trade with VWAP is to always, obviously it's kind of hard to see on this chart, but once you're trading intraday, if you see a price break out and you're trying to go long on it, but you kind of missed the breakout, for example, here, let's say you're trading below VWAP, right? Right. Can you zoom in here actually for a second? Just want to check something real quick. Yeah. So let's say you're trading below VWAP and you're trying to go long on SPY. Like you see how it didn't pass this level right here and you missed all this price action right there. And you're like, oh shit, okay, I kind of want to go long on SPY. I see a lot of SPY calls coming in option flow. We're having a pretty green day. There's no negative catalyst. Trump isn't tweeting or whatever. What you can do is you can wait here in that oval, right? And that's kind of going to be where you start looking at SPY, right? So at this point, you see SPY crossing VWAP and you're like, okay, shit, I kind of missed this breakout. So instead of trying to chase this candle, what you can do is wait for it to come back down and bounce, right? If you get that bounce, that's going to be your confirmation. And then once you kind of pass that level, that's going to be like double confirmation to get in your trade, right? So you see how we're looking at these past levels, right? And then we kind of have this little consolidation right there. And then boom, we get a breakout, right? Now, obviously, you're not going to get that type of move every day. Sorry, my pen stopped working. You're not going to get that type of move every day. But, definitely once you do pass like this level here, that triple top right there, and you reclaim VWAP and bounce off of it, that's a surefire sign that you should be getting in the trade, right? It's almost always a good sign.
And also always use volume with them because.
Yeah, please use volume, guys. Yeah, a lot of people see levels in the watch list and they say, okay, you should grab SPY calls over 356, but they always forget to account for volume, right? So these two candles don't really mean much. But if you're looking at this candle here, for example, right, that's a great indicator that shit's about to go down, right? And shit's about to go, well, I guess up in this scenario, right? You always want to look at these volume bars, right? These volume bars down here, they show you how many shares are being traded, right? So, you can have small candles and you can have a lot of volume, right? So if you have a pretty small, let's say, for example, you are, I gotta think about this. This is not a good example, but for example, let's say you're trading right here, right? And you see SPY coming down and you're looking for it to reverse somewhere around here, right? Somewhere in this little zone, right? This is not a great example because it didn't actually happen. but you kind of look down here, and if you see like this increasing volume right here, I mean, it's a good example, but if you see increasing volume at when you dip below VWAP or dip below any support level, then that's a pretty good time to enter the trade, right? Because you have this increasing green volume or increasing buying volume right here. So you have these little blue bars going are in an uptrend right now, right? And you have these candles going up, right? Even if those blue candles weren't going up, like on the chart, like even if these 3 candles weren't going up like that, if they were just all green and they're even trading sideways, I was still getting the trade, given that my volume was increasing on the buy side, right? That's a good indication that there's a lot of buyers and they do not want the price to go below this level, right? So if I saw it was increasing volume here, I'd be very, very surprised to see the price dip below here. And if it did dip below that line, then obviously the next line I'm watching is going to be right down here, right? And if we fall below that, then I'll consider it a lost trade and cut my losses right there. So always look at volume, right?
Yeah. So this one,
breakout. Yeah. Go ahead.
Yeah. So this one, you have increasing volume, seller reaction right here, and increasing volume. You have more seller reaction on these two candles right here, and then more volume coming in. This is a 3 minutes, so it's not gonna show you the best, but
Exactly.
so if you see the 5 minutes, increase the volume. Look.
Yeah. That's why it's always important to look at different time frames. Please don't look at 1 minute candles for volume. It's just not going to happen for you. 3 minute minimum if you want confirmation. Yeah, let's go a little bit more to volume. Volume is the number of shares that are being traded in a session. When I say session, I'm talking about the length of the candle, right? So if you're looking on a 15-minute chart, then your session is 15 minutes, right? On this chart, we're looking at we're looking at Roku. And these are 3-minute candles, which means that each of these candles represents 3 minutes in time, right? So if you guys are looking at the volume here, obviously, this would be a great time to enter. When you see this, for example, right? This could be a pretty good entry, right? If you see increasing volume and you look up here and you see the price about to cross that prior resistance level, that's a pretty good indication that you're probably going to break out, right? So when we say Roku calls above like 255 with volume, right? When we say with volume, we want to see something like this, right? And volume's always relative, right? So we don't want to necessarily say that you want to look for a certain number, like 82,000 or 200,000, right? Because we can't really give it an average number of volume. That's good to get in. It just has to be relative to the time period you're trading in, and that can even be within the hour. Because every single stock is going to have the most volume in the morning and towards the end of the day. That's because that's where most people are trading, right? In the morning, everyone's selling off and trying to get in cheaper prices. So that's kind of where we have like all of the action happening. And then this is like lunchtime, and this is where all the scalpers are getting in. It's where we're scalping SPY, taking those quick $100 profits in and out, and then every once in a while we're gonna have these little breakouts right here. And if you do see this increasing constant buying pressure right here, this is a great indication that we're gonna start seeing some upward momentum, right? And of course, you can use other indicators like MACD and Ttm to kind of confirm that reversal, right? So all volume shows you is what is happening, right? It's not really a leading indicator. It doesn't show you anything that happened before, but it can definitely get you in trades early, and it can stop you from, getting the false breakouts. So how to avoid false breakouts, for example. Again, I got to find an example. I don't see too many because this price action is very strong. Beyond a lot of false breakouts. Let's see.
I really
Okay.
disagree.
Yeah, I'm trying to find a false breakout. Yeah, I mean, basically, if you have, so you guys, when you guys chart, you all draw support and resistance lines. So if you have a good support and resistance line, right, and you see shares, you see the share price heading towards that level, but you see like your volume decreasing. I don't really see. Okay, here for example. Let me see here. All right, let's look at here for example. Right, you guys see those candles? This 85 level on AMD was pretty important, but if you guys looking down here, we have decreasing volume, right? So if you have decreasing volume, then the chances that you're gonna have, that price break out of that level is pretty slim, right? Because our volume was, just to make it very clear, I'm looking at like these 4 candles here, right? We have decreasing volume as we get to our resistance level, right? So that's a pretty good indication that we're probably not going to break out, because volume already started decreasing as we gain momentum to the upside. So the price was increasing, yes. We're making money, yes. But is it possible we might get dumped on? Absolutely, right? And let's say you're scalping AMD, and on this candle, you're like, okay, I'm going to play this breakout. Boom, you get out of the trade. And then by this point, you probably get stopped out of your trade, and you consider a lost trade. And, you know, at this point, you're just kind of hoping and holding and waiting. And, you know, you're all stuck. You're just stuck on that trade. And, you know, you could wait for this if you didn't get stopped out, but you're just worrying about this trade the whole time. And you missed so many other opportunities in this like 3-hour time frame. So that could have all been avoided if you just watch volume, right? You need to get in trades with volume. Remember, price does not move if there's no volume, right? It doesn't matter, right? You can reach any level. A share price can hit 100 in a second and then drop right back down if there's no volume in your price action. And all VWAP does is kind of use all this volume down here and kind of factor it into the size of the candle and creates a pretty basic line for you to follow. So it acts as support and resistance, and it is very important to watch both volume and VWAP when you're trading.
See, this was an example of aggressive bounce on the VWAP right here.
Mm-hmm. Yeah.
Yeah, it bounced hard.
Yeah. That's pretty much it. You guys good on that so far? Not much more. Not much else to say about it.
Yeah.
Guys good? All right, cool. All right, what's next? We're gonna do, yeah, thank you. Now this is about to break out. I'm excited for this. Yeah, it's gonna be fun.
Played people
This
here.
shit actually might go to 520 this week. No joke.
See this?
Yeah, yeah, I'm so excited for this. This is gonna pop. All right. What's next? Okay, so we did a volume, we did VWAP, we have to do MACD, and we have to do TTM. Let's do TTM first. That's
which MACD do you use? Just the regular one, or is this MACD histogram?
MACD is just a normal one.
Yeah, 12, 26, and 9. With there's no special settings. I use most traders use the same thing.
Histogram is just histogram, yeah.
Yeah, I mean, keep the histogram on. Yeah, I mean, I just keep it like on my chart like this. And it's the exact same thing, just without the lines. Yeah.
So the histogram on the Ttm Squeeze is the same as the MACD?
No.
No, this is not TTM. These are just 2 MACDs, right?
It looks exactly the same, but it doesn't correlate the same data though.
Yeah, it shows completely different things. I mean, the histogram looks the same, but TTM is actually more of like a volatility indicator. Like they don't have the same values. Yeah, they're completely unrelated. I'll explain it in a second.
Are we doing TTM first?
Yeah, let's do TTM because that's just easier. It's kind of explain.
Can't put that above volume.
All right, Ttm Squeeze. So basically, this is my favorite indicator, only because it's probably the only one that quote unquote predicts the future. So, you know, it shows it takes 3 indicators into account: Keltner channels, Bollinger Bands, and momentum, right? So this is all in all a momentum indicator, and the goal is to basically show you when there's low volatility in the market, right? It uses a ton of calculations to kind of, you know, just tell you when there's low volatility. And definition of
Craig, quick question: do you add the momentum to your Ttm Squeeze, or do you keep that separately?
I usually don't, but I think you should. I mean, I don't. I watch price action for it, but most traders do, and I think you should. Yeah. Yeah. I mean, I just don't use it as much, but I think it's very good just to have it's like an extra set of eyes, basically. All right, so this might look a bit confusing to you guys, so I'll just explain it real quick. The first thing you guys want to look at are these little colored bars right here. And it's going to be different on everyone's chart. You know, if you guys are using Trading View, I think the colors are a bit different, but the concept is all the same, right? So there's 4 colors on the Ttm Squeeze, on every Ttm Squeeze indicator. We have one to see when there's increasing momentum, and then this is decreasing momentum, right? So whenever you're on the top half of your TTM, you're going to have 2 colors for upwards momentum, right? So this light blue color here is showing when the momentum's increasing, as you guys can clearly see right here. And then this dark blue right here shows you when the momentum is decreasing, right? So you guys can see how, hold on a second. It kind of lines up with this candle. I can't tell for sure. Let me see. Yeah, so it kind of, yeah, like once you guys kind of see, I mean, first of all, if you guys have a run like this, it's time to get out of the trade. I mean, obviously, if you guys were in before, it's parabolic, so just get the hell out of the trade. But whenever you guys see these like dark blue bars, it doesn't necessarily mean the price is going down. It just means it's losing steam, right? So think about it like running a foot race, right? If you're running a mile and you just sprint the whole time, there's eventually going to be a point where you just start slowing down. You're kind of losing that initial burst of speed. That's all this is showing you, right? So, there's many times price can keep going up, but this is going down, right? It's just a signal that all of that buying pressure has started to wear off and the price action is due to correct itself pretty soon, right? And then on the other side, if you guys can look at this red volume is increasing selling pressure. And this yellow right here is just showing you that the selling momentum has decreased, which can be a good thing, right? So most traders who are trying to go long on a position, meaning that they want the price to go up, they're looking for when the TTM squeeze, when the selling pressure is kind of slowing down, because that can indicate the beginning of a reversal, right? So if price is going down, all selling happens like this, just like kind of like that. So there's always going to be a point where the price is just plummeting down. And then at some point, the price is going to start slowing down the selling pressure and eventually reverse, right? And then head back up. So this is kind of just showing you what that is, right? That's all it's showing you. I mean, ACB isn't the best example, or at least this day isn't the best example. But I hope you guys got the idea. Again, it does not show you what the price is doing. It just shows you the momentum of the price, right? So, for example, yeah, so this wouldn't be as helpful because if you bought into this right here, if you thought it was reversing right here, you actually would have gotten dumped on, because all it was showing you was that this selling right here slowed down. So the price is coming down and then it lost the selling momentum, right? So for this TTM to have stayed red, this price would have had to keep coming down like that, right? But it didn't. So obviously it started to consolidate, which is a sign of a reversal. But as you guys know, this is a bear flag. So it actually indicates more downside. So you guys can't really use TTM by itself, right? Furthermore, the volatility actually didn't fire, which is something else I'm going to get into in a second. But if you guys just look, not all these yellows will turn back into the blues, right? Sometimes you might go from yellow back to red and from yellow back to red, right? So you guys can't always just look at these bars and assume that prices are going to start reversing, right? It's just showing you what's happening, and it can kind of give you an idea of what might happen next, but you still need to use regular technical analysis and common sense to decipher whether you have a breakout or if you're just looking at another losing trade.
Someone asked, what's the difference between TTM and MACD? TTM is more accurate. I think TTM is more accurate than MACD. MACD is
Yes, that's a facet. MACD is just used to confirm what happens. I mean, as indicators, they don't share anything in common.
Yeah.
Like actually nothing in common. The TTM just tells you what's happening with the price action, and the MACD tells you what happened with the price action. The MACD is always going to be late. It's always going to be late. It just tells you what happened before. I mean, it uses moving averages, right? So if it doesn't happen, it can't tell you what's happening. But TTM can kind of give you a warning of what's going to happen, if that makes sense.
It's a good
So
one right here.
Yeah. Question on TTM. Like sometimes you'll have this price still going up, even though it's in like that, the royal blue now.
Right. So that's what I was saying before. How the price can still be going up, but the momentum is dying down, right?
Yep.
So like right here, for example, we have this huge breakout right here. So the price started running and running and running, but it didn't keep running at that rate. It kind of just kept, and it was kind of tapering off, right? So that's why the blue came down here, right? Does that kind of make sense?
Yeah, it's
Your
losing
price-
momentum.
So yeah, it's still going up in price, but the momentum was coming down, right?
Yes.
Exactly. Right.
All right, and then how do you use the momentum line that's on top of the TTM right there? Like, what does that indicate? Like, how do you read that?
It's just less buyers coming in to drive the price up.
No, I'm talking about the momentum, not the actual bars. The
the blue line. Right here.
Yeah.
Oh, it's just showing you it's just giving you a better picture of what the TTM is doing. Like how the MACD has a histogram, like this is kind of a line that TTM is using. There's nothing to read on it. It's just, the TTM, like these bars are telling you what this line is showing. That's all.
Gotcha.
Yeah, there's not really much to it. Like it's not like you want to look for it to be a certain level or something. Like it's just telling you what's happening. It's not like RSI where you have like levels to watch necessarily. I mean, obviously when momentum does get too high, you can expect some pullback. But then again, decreasing momentum does not necessarily mean your price is going to go down. So that's why I don't want to tell you any levels to watch in the line or anything. If that makes sense.
Yeah.
Yeah. So the last part of this indicator that I didn't really go over was these little dots right here. There's only two colors. We have green and red dots, right? So yeah, basically these dots, this is the volatility aspect of the TTM squeeze. So whenever price is in a squeeze, we say it's low volatility because price likes to move, and when price doesn't move for a while, it tends to have a pretty significant breakout. So what the TTM squeeze does is it kind of shows you these areas where the price isn't moving where it really should relative to the momentum, right? So whenever as traders we say the TTM squeeze is fired, it means that if you ever see these red dots, I would say 99% of the time there's going to be a big move, right? And the question is always which direction, right? TTM can't really show you that. For example, if you just looked at this and you saw low volatility and momentum was decreasing, one might think that we might just start heading downwards very quickly, but we actually ended up breaking out here, right? So these red dots will always give you a warning for the most part before a huge move, unless news breaks or something. Sometimes you guys will see like stocks run for no reason. Like Tesla was a bit special, but like Zoom the other day, like it went from like 400 to 440.
Netflix too. Yeah, Netflix.
Yeah.
You actually got a fire before.
We got a fire, yeah. So you guys, I mean, obviously you guys can't be watching like 15 charts and see like even one dot like that. You guys are gonna miss some of them, but this indicator will get you in before something happens. I can promise you that. And it's up to you to kind of figure out which, on the 5 minute, that was your warning right there. Clear as day, right? They had a full 25 minutes of warning before that happened. So yeah, red dots, whenever you see them, get ready for a big move, right? Because it means the price is going to move in one direction.
So what do? You wait for the first green dot, and then depending on what color the histogram is, if it's that teal or red, is pretty much the direction that it's probably going to head.
Yeah, exactly, right? And this one is actually really easy because you would have gotten in way before this candle. Why? Because you have your TTM firing here and the volume, right? When you see that volume, because think about it, right? We're at this level the whole time and nothing looks, too promising. But just compare when we're at this level, compare this volume over here, and then compare it to this volume right here, right? You had a full 5 minutes to get in this, right? Because even if you weren't in, if you're watching this candle form, if you're watching that candle form, right? If you're trading, you can see this volume bar grow. And the second it starts growing above this level, if you're watching one stock, you would have gotten this way before anyone got in the trade, right? And if you bought a 490 call, same day expiration, you could have made like 400% on that one trade right there. And this just serves your confirmation. And you could have exited on this blue bar, honestly, which probably lines up with that candle, which actually ended up being a bull flag, which went to another high, but that's needless to say. That was enough warning, right? So these indicators are out there, guys. You just have to learn how to use them. That's what I'm here for. This is how we can kind of predict trades. The TTM will never really steer you in the wrong direction as long as you don't rely on it to tell you which direction the stock's going to go. It just gives you a bigger picture overview. That's all.
When you're day trading, like, are you just constantly looking through companies, or
yeah, pretty much. I mean, I always have like, again, in the morning, I always have a plan. So, during the charting sessions, I always like have a contract in mind. I pick my contract before, usually. I have an idea of what the price is going to do. And then I set alerts for everything. So, I'm not necessarily just like going through every single chart trying to find things.
you're just waiting for the alerts to like clip off?
Pretty much. I mean, there is an element of, again, it's a balance between going through like so many different charts at the same time. I'm not just sitting there flipping through charts, but I'm also not doing anything, like I might be watching Spy, honestly, but I'm not, during the day, I'm usually just doing other stuff. And if I see something, I'll just type in the chat. So, all right, we got to restart resume just because of time limit.
Yep.
So we're gonna go over other stuff, MACD and some other crap.